All right, welcome everybody. Great show today. We're going to do a live stream that we normally do is recorded. Let's get started. So right now, many Tesla investors, they're expecting the stock to explode higher as soon as next month. But is that what we're going to see? We're now just weeks away. There's going to be several very big events that's going to transform the company. Not only is Tesla's Robotaxi launching maybe June 1st, but we're also expecting the more affordable vehicles that should kickstart the second growth wave for vehicle sales. So we've got the bulls here with us today. We've got Jeff Lutz, Mr. Incredible, the rational bull. You got James from InvestAnswers, the analytical bull. And we got Cern Basher, the bot bull. So let's get started with that first question. Some people actually think that the stock could jump as soon as next month. Why? Well, a couple big reasons, right? The first one is Robotaxi. So they say that as soon as June 1st, maybe, they're going to launch a Robotaxi network. And even though it's just 5 to 10 cars or 10 to 20 cars, just the fact that they launched a commercial paid program with actual details is enough to make the stock jump, some people are saying. And the second one is we are expecting these more affordable vehicles to come. That expands the TAM. We'll talk a lot more deeper about that, but that could make the stock jump as well. Let's start off with you, James. What are you expecting?
Yeah, it's probably easiest to explain with a little chart, if we may. If you could pop up that little chart there, a little bit of TA time. This chart tells you everything kind of you need to know. It's what we call the ATR model. It has different layers of support and resistance. It shows things like a traditional bear market for all equities. The 200-day moving average is that red snake. And then the trend, there's a couple of things from this chart you can see real quick. One is the trend, which is the golden part, is just flip positive. So we're going into an upward movement, which typically can last 6 to 8 months for Tesla. If history repeats, sometimes it can last 2 years. So bear that in mind. We are currently also, very coincidentally, at level 4, which is confluent with the 200-day moving average. We need to break through that 200-day moving average, which is about $295, which we're about $7 or $8 away from. Once we do that, then we go straight to 350 to 375. That's where we are right now. Things are looking very, very good from a TA perspective. The other question is what happens with the overall market. I think we're definitely for a long time, like 5 weeks now, the worst of the tariff tantrums is behind us. And now there's nothing but, well, we'll talk about some of it today, but I'm seeing catalysts to the power of other catalysts. It's, you really need to sit back and take days to think about and digest the type of breadcrumbs that Elon Musk drops during earnings calls. And then when you distill all that in your head and you look at all the lines of business and all the ideas and all the stuff that's coming and all the macro that exists, the penny drops. 2026, 2027 will be bonkers off the hook.
Wow. Okay. And then next month, you're thinking if we hit the 295, then
we've got to get through 295, then it's 325 to 375 very fast. So
all right.
Just the way it works. Now, bear in mind, sometimes Tesla can do the most amazing things, and it's like a nothing burger for the market. But these things are pretty amazing. When the world, and so for us, the TradFi analysts see cars running around autonomously in Texas, and then they see the scale, and then they look at pictures from Joe Tegmeyer, then they'll put 2 and 2 together.
All right, very optimistic. How are you thinking about this, Jeff?
Yeah, I agree with the technicals on. I've been looking at that, but and James does a great job on that. By the way, it was a good overview. I first look at the fundamentals, and fundamentally, what Tesla is building is distinguished. It's unique. Their approach to Robotaxi is truly unique. The only issue in that is there's a small minority of analysts that actually understand it. Actually, more retail folks understand it. If you look at the conventional analyst thinking, if you read some of the things that they're putting out there, some of them, Tesla's got a big multiple on it, so they're definitely putting some gravity behind Tesla launching a Robotaxi network. I don't think we can sit back in retail and say that they don't get it and nobody's, the fact that Tesla has the multiple it does tells you that, they're putting some wood behind it. But when you start peeling back the understanding of it, it's still, I think it's completely undercalled. The unit economics the approach of Tesla and what they're doing from a unit economics perspective, there's nothing out there right now that's being built that's going to match it. And when unit economics, think of it as a little bit of around like you're building one product and can you do it profitably? But then when you put the scale and the fixed asset utilization behind it, it becomes really intense. It's a monster in terms of what they're building. But if you don't get the underlying unit economics right, you can have you can try to put all the scale in the world, or it'll actually prevent you from scaling, which is what you see, I think, from some of the other robotaxi vendors out there. So in summary, I think there's a lot of things going really well for Tesla. If you look at even the auto business right now, a lot of the analysts and a lot of the media are stuck in the past versus looking ahead. And when you look ahead, Tesla is positioned very well from a tariff perspective. They're already inside of each economic zone with very high local sourcing. They've got new lower cost models coming out. They're going to address, I believe, segments that they don't address today. I think the media has it completely wrong. The conventional analysts have it wrong of these just are being stripped down Model Ys coming. If they did, they wouldn't have dedicated a paragraph in the last 4 earnings reports to strip down a car and ship it. So I'm not buying that. I think they're going to be addressing different segments, and therefore it's going to actually grow their TAM. And so on the auto side, I think we've seen the worst. They've done the factory transition to the new Model Y. I think we've seen some of the worst. There's definitely still macro risk out there. There's definitely still macro risk. That's why you see all the financing deals, and it's happening in multiple regions with multiple players as well. But on the robotaxi side, I think they're unmatched from a cost structure perspective. We can get more into that in a bit. And then, the humanoid coming. The question is it's hard for me to say like, oh, they're going to get it. Like everybody's going to get it, and it's just going to go. It's a very unpredictable stock. I think you've got a minority of media and a minority of analysts that understand it and can actually articulate it. And I think as that grows over time, there'll be more acceptance of it. But right now, we're still caught a little bit in the past and a little bit not understanding of what we're doing here that's different than Uber, that's different than other folks. So for those people, they're going to actually have to see it drop to the bottom line for them to react. And of course, then it's going to be too late.
Okay. Thank you. And then Cern.
Yeah, I think what James and Jeff said there was well put. I'm not sure I have much to add other than, I think of it this way. Tesla is a fast-moving train, which at times, depending on where you sit, looks like it's moving very slowly, and people get very frustrated with the pace of Tesla, right? The pace of the train. And people even get upset to the point where they start questioning whether Elon should be the CEO, whether somebody else should run the company, whether we should replace the board, and all those kinds of questions. But to me, it's a bit like we're on this train and we get to a station, and let's say the stations are like, quarterly intervals, right? And we get new information. And depending on what information we get, people decide to pile into the train or pile out of the train. And yet the train is still going down the tracks to the same destination ultimately, right? And maybe there's some delays at some of these stations, right? But it's just funny how human nature, it's just how it gets whipsawed back and forth. All these things that we're talking about now that we're excited about, we've been talking about for a long time. And sure, yes, it's taken FSD longer perhaps than anybody wanted for FSD to get to where it is today. But you know what? The wait will be worth it. And it's going to change absolutely everything, not to mention Optimus. So just keep that in mind. I mean, it's exciting. And it's what was a headwind, a few weeks ago has suddenly become a tailwind today. But yet the train is still going down the tracks, still moving. As shareholders, we don't get to see everything behind the scenes. We don't get to see all the movements of the train. So there's pieces of this that are missing from time to time. But it's still going down the tracks. And it may accelerate from here.
In fact, I'd like you to take your train analogy one step further. It's like a train that's going to morph into a jet, literally. So anyway.
Do you guys think, though, that Robotaxi and this new vehicles that's going to expand the TAM are those already built into the stock price now, or could they pop the stock in the next month?
They're absolutely not built in.
Yeah.
To some degree, like to Jeff's point, the multiple on Tesla is high, but when you look at the multiple is, let's say, on where earnings could be 5 years from now, I've calculated that Tesla's multiple could be 1 or 2 times earnings 5 years from now, right? So in that case, Tesla's incredibly cheap if any of those projections are remotely close. And I think we were pretty conservative in modeling that out. So based on earnings that the company's producing this year or relative to last year's earnings, the multiple is super high. But this is not uncommon for a lot of high growth stocks. NVIDIA went through exactly the same thing. Its PE, when you look back 5 years, it was trading at 2 times earnings. At the time, it didn't seem cheap. But in hindsight, the hindsight PE was super low. And I think we're seeing the same thing prospectively for Tesla now.
But the way that Nvidia played out is it had to print and then guide much higher, and then it was off to the races.
Yeah.
So and I would call Nvidia mostly a neutral. I know if you're tracking Nvidia in terms of media coverage, everybody thinks that like they get a raw deal, but compared to Tesla, I would say it's fairly neutral coverage. So be interested to see. I mean, you could see both sides of this, but I honestly think the way the company's positioned right now is it's getting credit in the multiple. It, to Cern's point, it's not getting credit for all of it, but it's certainly getting credit for a lot of it. They've got to execute really well in June. We don't have to sit down and belabor it, but execution is going to be very important. How this is portrayed in media, if there's an issue or a problem, how Tesla responds to things, it's going to be very important. I think in June, I just don't know if like there's gonna be robotaxis running, and that's just enough, and then just everybody gets it all of a sudden. I'm not sure. I mean, and the question is, who's driving this multiple up? Is it retail? Is it retail driving the multiple up? Because then retail's going to keep going if they see that. So anyway, I'd be interested to see this. And then to me, the longer term thing is this is structurally built out to be lower cost, greater utilization, and a better product than what other people are building. Even though the other people are there today, what Tesla's building is so much better. It still reminds me of the smartphone transition so much. And if you were in the inside of it, you could see it coming.
Yeah, and in fact, this conversation, in fact, Cern and Jeff, you triggered an old idea in my mind. You know, you've heard of the 43rd fold. If you fold a 0.1 millimeter thick piece of paper 43 times, it'll reach the moon and back or something like that. It's the same type of thing with Tesla now because they have so many advantages. And if we look at TAM, and I have a couple of slides on TAM, I came up with another kicker. This is an old one from ARK Invest from a year or so ago, but how the TAM explodes as the price drops. And we haven't actually seen the full effect of this. And I tried to create a much simpler visual. If you take and this is ballpark approximately correct. If you imagine 1 million being a block of, say, 100 cars or 100 customers or whatever, if the price of a car is 50,000, you got 1 million customers. If it goes to 40,000, you got 2 million, 30,000, 4 million, and then 25,000, 5 million. We're on the cusp of that right now. But there's a new twist I'd like to bounce off the brain group here, is there's an extra kicker on this. Not just the TAM, but the competition all either have left the building or just got a lot more expensive. And this makes this even more egregious. You could take this and double it almost. Have you thought about that, Jeff and Herbert and Cern? The impact of tariffs? It's a huge tailwind that nobody's really pricing in.
I have. I've gone through the top 10 selling EVs. We're talking not about Robotaxi and about selling cars, but even producing Robotaxis and then getting them into these various economic zones. It's not the same challenge it was 6 months ago. It's a greater challenge. So Tesla is not just taking their existing manufacturing process and building a cheaper car where they defeature it. They're changing the manufacturing process and the design process so they deliver an equivalent or better functionality type end product, but build it cheaper. So it's more transparent to the end users. I don't think a lot of people are understanding that distinction. They think that getting to $20,000 or $18,000 COGS means it's not going to be a really good product, and in reality, it's probably going to be a better experience than their $35,000 plus products, and that's the magic. That's actually the magic of Tesla and what they're doing. But yes, the whole landscape is different. There's a list of cars that they're gonna have trouble. I think there's this Ford announcement just now about them increasing prices a couple $1,000s. I think that's the beginning. And I think that's them feeling this out in various phases as they have to buy more inventory of components, and as they have to start bringing more cars over the border. That could change. That can get worse. There's many things they can do outside of MSRP as well to not absorb, but actually increase prices in other areas. They're going to increase prices globally too. So yeah, it's a different landscape. Tesla's fundamentally became cheaper in the last couple of months, and it's a question of how much cheaper and these tariffs are going to stick. It's more of a question of leveling.
Can you show your slide again, James, with the ARK Invest slide?
Yep.
I like that one very much. So my thoughts are this, right? So first of all, this is such a powerful slide. People need to really study this and understand this. If you're selling a car for $100,000, the percentage of people that can afford that is like look at this chart. It's like 1% or less, right? And anything over 60,000, 65,000, you got 3% of people that can afford it. Here we go. Tesla has succeeded despite their cars costing over $50,000, $40,000, and they're only playing at the under 10% of the market share. Meanwhile, BYD, all the other cars, they are selling most of their cars under the $40,000 mark, and that's why Tesla's left them alone. With this new version of these cars coming out, if they are under, like you just said here, let's say at the $30,000 mark, the TAM explodes by 50%. That is a massive difference between, let's say 10% to 50% that opens up for Tesla. At this stage today, all the car companies, they're not making money because they're basically undercutting their price and they're willing to take losses. How much longer can they take losses? If now then Tesla comes in and starts offering a segment in every segment and then still making margins, still making profitability, but the others aren't. And then, like you said, James, with the TAM, the tariff coming in, that's going to just completely they're already losing money. We're in the EV side of it. Now they're going to lose even more money.
It's even more egregious than that. I don't know if you can hear me, but I think my screen is frozen. Can you hear me?
No, I can hear you, but your screen is frozen.
But it's the chart here is even more egregious than that, because at this price point, if you cut the price in half, you go from 65K ASP to half of that, your TAM goes up 17x. It doesn't go up 50%. It goes up 17x.
70 times.
It's huge.
Gotcha.
And this is what, if they can get close to a 25K ASP for a vehicle and then throw in FSD there, it's game over. I can't see how anybody can catch up. And please help me understand that. Am I crazy?
I will answer the question about will Tesla stock explode. I think we heard the three of you say it. I actually, not going to be popular. I do not think the stock's going to move until next year, January, February next year. And the reason is that a couplefold. One is, theoretically, a new more affordable vehicle should move the stock, right? Bigger TAM. We just talked about it. But I think that I think we heard Elon and Tesla say that the ramp up is not as fast as they had initially modeled out. So it might come out again. I guess the macro, the global tariff scenario right now. If it comes out in the next month, if all that changes, great. But right now, it looks like we're on stagflation, whatever it is, stagflation, and it's kind of like still in this stage. I don't think we're going to see the global auto sales move this year. It's going to maybe next year. The second thing is FSD, autonomous. I do think it's mostly built in. They're going to come in and build 10, 20 cars, then 200 cars, then 1,000 cars, 3,000 cars. By the first 6 months, it's going to be a slow, growth and just testing a market. It's not till next year. And as Elon said, not till the second half of next year that we're going to actually see the needle move in terms of earnings. So I am just being cautious, and I'm not going to expect the stock to explode. And then when we talked about Nvidia, I did a fantastic, I think Cern did a fantastic show. You guys should look for the show on my channel, where he basically showed how Nvidia's stock popped only after sequential earnings upon earnings growth. Every earnings just kept growing, growing, growing. Tesla doesn't do that until the second half of next year. So again, I just don't see, I'm not going to say that it's going to happen this quarter.
I think Tesla is different than NVIDIA for two reasons. One is we're all aware now of what happened to NVIDIA. Tesla, too, I think, has a lot more eyes and ears focused on the company than NVIDIA did. There's a community around Tesla stock that did not exist and still does not exist for NVIDIA. So I think that helps. James, to your point, there's also something that's interesting, I think, that's going to happen with Tesla's market opportunity. Robotaxis roll out in Austin. The public increasingly becomes aware that these vehicles can drive themselves. At some point, Tesla is going to sell FSD, and you're going to be able to sit behind the wheel and do whatever you want. You can eat, you can read a book, you can sleep, you can do whatever you want. That is going to explode the demand for Tesla vehicles, because I don't want to drive anymore. And if I don't have a Tesla, I want one of those vehicles. So we're talking about a TAM expansion on top of a TAM expansion, right? That's going to be an interesting thing to play out. I don't know what the time frame on that is, but that will definitely play out, because that is like the coolest thing you could possibly have in a vehicle that drives itself. Every time I put somebody in my Cybertruck, they think they're going to drive it. I turn on FSD and their minds are blown that this thing can drive itself, right? That's going to happen at a bigger and bigger scale as time goes on. Herbert, to your comment about you don't think that, the Robotaxi unveil in Austin is going to explode the stock. Let me ask you this question. How many vehicles do you think that Tesla will have in their fleet in Austin by October?
October. Okay, we're in June, right? 1020 day one, but they can easily grow that as soon as they want, right? 300, 1,000, 10,000, anytime they want.
How many do you think that they will have?
So I still think it's going to be a slow growth, because you heard Elon say dip toe, dip toe, dip toe. Now, depending on how you want to interpret that, does that mean we're not going to expand cities until October, till January? Or does that mean I'm not going to go to 1,000 until December? I'm going to take it as the maximum would be 2,000 by October. That's my guess.
If the number is 2,000, then in Austin, Tesla would have a 62% market share of the vehicles in Austin, and they would have about a 90% market share in trips.
Yeah, they've already proven that they can take over. What's your number?
Well, so my point is this, though, that if they can prove that they can take over a city and destroy rideshare in the space of 3 or 4 months, as an analyst, I take that to the bank and I copy paste, and I figure out what my model looks like.
Even before earnings appear second half of next year.
Because Tesla has proven that they can do it. You just need to prove it in one city. Now, there might be Wall Street analysts that say, oh, Los Angeles or San Francisco is different. There's different market factors. They're not going to be able to stomp on the competition in those cities. But you know what? They just need to prove it in one city. And if they can take over Austin, Texas, and destroy rideshare in that city in the space of 3, 4, 5, 6 months, that is the signal that I'm looking for.
Yeah, no, I think we keep hearing these numbers of a couple thousand robotaxis from other companies, and Tesla can produce that with the current product design in about a shift.
6.5 hours, according to Brian White.
Yeah. So I don't think people just understand the economic scale. There's no sending these things off and having them torn down and rebuilt. The whole thing from the base silicon in the product all the way to how the product is cleaned is designed by Tesla, manufactured by Tesla, managed by Tesla. I just don't think that that's well understood. But I do want to caution people, it's going to take time for them to get to the steady state economics, and it's going to take time for them to scale. But I heard Elon say they're dipping the toe this summer, but they want to be in multiple cities by the end of the year. True. So I think you're going to see this consistent scaling from them as long as there aren't any fundamental execution issues. And yeah, the other thing that they said I found surprising is unsupervised FSD by the end of this year. So I do think that has meaningful impact, but I have been surprised at the lack of impact up to this point. So I'm willing to say that I could be wrong on that, and I could be overcalling that too. So something's got to break free, whether it's a pricing curve, it's an awareness, it's awareness piece of it. Something on that front has to break free. But just when these conversations on X are so they're so one dimensional. It's just like they have a product and they don't, or they've been doing it for and it's just it's really it's not, it doesn't even have to be a long form conversation. I actually think you could encapsulate it in a couple of tweets. I actually just don't see enough of the right conversations happening on this. When each of these individual programs get to their terminal economics, their peak economics, I don't think it's going to be actually close.
Untouchable.
Yeah, I don't think it's going to be close, and it's just have the conversation. Start thinking about the fleet management. Start thinking about the cleaning. Start thinking about the construction of the vehicle and the scale of the underlying scale of the company that's building the vehicle. Start thinking about those things, and then plot it out. Then start thinking about the actual approach from an autonomy perspective, the hardware cost, the software cost. And as soon as you go through those conversations, you only get the one answer. Now, there will be other people that do this, and there will be other people that bring their cost structure down over time. But I think you're talking about a series of years, not a series of months in terms of the gap.
Yeah, I think it's a good place right now, Jeff. You're laying it out there for us to convince the audience of where all this is going. And I think we can do that with some numbers. So this is the first thing. Shout out to Cern Basher, friend of the channel. He put this together, and I found it very, very profound.
Your channel.
Yeah. Sir, we need to start counting autonomous miles. When you look at this chart, well, it's your chart, Cern, but the way I interpret it is we are so early, which is fantastic. The opportunity is so massive. It's bonkers. Any color to add to that chart before we get into some of the numbers?
Yeah, I mean, I just wanted to show in the starkest way I could about where we are today, right? And so in the United States in 2024, 3.25 trillion miles were traveled. Uber did 33 billion-ish of that. Again, that's an estimate that I came up with. I think it's in the ballpark. Waymo, I think, reported they did worked out to about 16 million miles, right? Tiny numbers. And Tesla, of course, Robotaxi wasn't operational, so 0. This is the ultimate opportunity. Along the way, they're going to destroy rideshare. Along the way, they're going to eat into vehicle ownership. Along the way, they're going to expand the number of miles traveled. Along the way, they're going to have an opportunity with delivery. We're talking about a platform. This is not just about taking market share from rideshare. That's just the beginning. That's the early days.
Yeah, exactly.
The opportunity is enormous.
Exactly. And getting back to Jeff, the unsurmountable lead, let's just pull an example of other Robotaxi hardware suite and all the stuff that they need. I mean, you can see it all here, all spelled out. You can find the prices yourself. You build your table. The hardware suite is approximately $40,900. It could be more, it could be less. Then you need to buy the vehicles, and some of the vehicles they buy are very expensive that some of these other vendors provide. But you have to attach it to the vehicle and set it up, and then you got annual maintenance and cleaning and charging if you don't have your own charging infrastructure. And then there's a whole bunch of one-time costs. So if we compare, say, the other robotaxi firm to Cybercab, it's 114 grand versus 15 grand. And I know, Herbert, you had conversations about this too, and that's huge. Total 5-year cost as well, with annual recurring costs is 267K with the other firm, 84K with Tesla for 5 years. And then assume the same miles per year, 62,137 over 5 years. That's 310,000 miles, assuming the car is reliable and stuff. And cost per mile over 5 years is 86 cents. And that is very, very cheap and minuscule for the other company, and 27 cents for Cybercab. Some people believe it could get as low as 20 cents, which I'd like to bounce off you guys too. And then the cost per revenue mile, half our rev gen, assuming half is deadhead, $1.72 versus 54 cents. Who can catch this? That's the question. Then we go.
This is perfect. Well done, James. This is exactly correct. So I just did a fantastic show with AJ, and that show will drop this Sunday. Everybody should watch that. It is amazing the amount of work he did. He calculated his cost per mile for Cybercab could be down to 15 cents.
Oh, wow.
But if you add in the deadhead miles, then you double it. Like you said, 50%. I like that. We're getting to 30 cents. Anyways, the point being that the Cybercab cost, first of all, the cost of the vehicle does matter. So the people who argue and say, which is the way most CEOs or the other CEOs, they'll say that it doesn't matter what the cost is of the vehicle because it's basically amortized over 15 years. Well, no, that's not what's going to happen. And the cost does matter. It does add up. Yeah, great analysis there.
In fact, I'd like Cern, because I know you've probably modeled this too, and Jeff, to push on some of these numbers. Are they too high? Are they too low? Or are they bang on? And I've looked at many different sources. And the other thing to consider too is, a lot of these things people talk about elements like half or deadhead miles. I don't think that's the case. I used to live in New York City, and anybody who lived there, and there's a famous book in the 90s called The Meter Drop on how cab drivers make their money. The optimal cab ride in New York City is 4 blocks, because within a half a block after that, you pick up another ride. But when you step into the cab, it's $2.50, meter drop, click. That's where they make all their margin. And then incremental miles after that. So the optimal ride length is actually very short for a taxi. The worst thing a taxi driver ever wants to do is drive from New York City to Newark Airport. That's death for them. They hate that because they deadheaded back. So that's another important factor. I think Tesla will have the smarts to deposit their vehicles in high traffic zones where they can get that meter drop effect and not have half deadhead miles. And the other factor is too, I don't think the competitor robotaxis will be on the roads for 3 years. I've seen them in San Francisco. Some of them are beat to hell after a very short window of time. So there's just some thoughts from me on this before we go a little bit deeper into financial modeling and what this could mean in terms of stock price a year from now, 2 years from now, 3 years from now.
My overall takeaway from this, James, is that Tesla will be able to price per mile at a number that's lower than the cost per mile for the competition. Right? They don't even have to do that, but they could if they wanted to, and one day they will be able to as they scale.
So 85 cents in this case.
Yeah.
Or $1.
I don't expect that.
They can go all the way up to $2. It's still cheaper than what they can afford.
Right.
It's like
Tesla doesn't need to undercut much in order to destroy the market.
Yeah.
Right. But just again, to put a sharper point on it, they could if they wanted to or felt that they needed to. And then the competition is just losing money every single mile that they move the vehicle. And so the question is then, how much money do you want to lose? And that's the issue that the automakers have been facing with making EVs, is how much money do they want to lose? And this is an opportunity to lose money at scale for them.
Yeah. Not even, actually, I'd argue with you there because they can't even do it at scale.
Right.
It takes too long to outfit their cars.
No, good point.
So a question for you, James, and you guys, and let's translate that into stock. The problem is that if most stock investors look at 12-month forward PE, 12 months. And if that's the case, you're not going to see these numbers appear into the earnings. Now, Cern might say that the PE is going to rise above 120 because they're going to go, oh, this is not built in yet. But are you guys telling me that, nope, this time's around different. This time's different because it's such a big deal that they're going to go 48 months. They're going to go, 3 years forward and bring it back.
That's
go ahead, James.
Well, that's the big $1 trillion question. How far do they look out? Literally, exactly. But I think it's going to be very easy. Like, you can literally do back of the napkin exponential math on what you see outside Giga Texas with the 350 frames we saw. I think Tesla have a surprise up their sleeve, and I think they're going to try to get to 2,000 cybercabs just to rub it in the competitor's face or whatever in a short window of time. I think that's the case out there. I think I've got a button open. Sorry about that. But yeah, but there's more. We can look
into the rating.
Yeah, we can look into the numbers actually of the impact on stock price, because I've got some sandbagged issues. But you mentioned a P of 120. I assumed 80. Because
just 80. Okay, that's fair, because it's been again, you guys have to watch the show I just did with AJ. He just showed that the median P for the last 5 years for Tesla is 120. So
I always like to sandbag. This is the sandbag Robotaxi valuation based on updated data. I brought some stuff forward because, Cern, when you and I did this, we were pushing activity out not to begin until like 2026, 2027. So that's brought forward, but that's a bit hard to see. Orange is Robotaxi valuation. And this is where we get back to the 43rd fold, the exponentiality that humans can't wrap their heads around. But if you look at the actual dollar amount, this is a blown up version here. This is what I believe could possibly be the revenue in millions. Could be a bit high in 2025. They're just getting started and they get started real slow. But revenue per share could just be as minimal as 3 cents, which is a nothing burger. With a PE of 80, that's a $2.67 share impact. It doesn't start getting exciting until 2027. But in 2027 and 2026, they'll be able to look forward to 2027 because they'll have 2025 data and 2026 data. So the analysts will be able to take out the little pencil and the little spreadsheet and say, oh, this is going to be worth at least $250 in addition to share price. Forget all of the other lines of business. Forget energy, forget FSD take rate, forget the margins on cars, which I believe is going to go through the moon because there's no competition, and so much more. It's crazy. And then it's $500 in 2028, which you'll see in 2027. So, and then again, we're just talking a couple of cities in the US for Cybercab. This is the price I come up with. Over to you guys.
Yeah, my thoughts on this, James, would be that we also have to factor in the rate that Tesla will be able to copy and paste each city.
Exactly. Huge.
So Austin, sure, we expect it's going to be slow. And again, I expect in June and July, there'll be tons of media articles about, oh, Tesla's rollout is slow, disaster, failure, all that stuff. Okay. But come August, September, October, it could be very different. They may own the Austin market sometime in 2025. Yep. Depending on how quickly the ramp is. And then the question is, how quickly can they take what they did in Austin and copy that to Houston, Dallas, Vegas, and all these other cities? And every time they do that, every time they copy and paste, it'll be that much faster and smoother than the previous time.
By the way, I want to share an anecdotal story that many people may not be aware of, but it's something that took me by surprise. And it was a market segment I did not see coming. If you are in San Francisco between the hours of, say, 3 p.m. and 6 p.m., all you will see is little boys and little girls sitting in the back of a Waymo alone. And it's the freakiest thing you've ever seen. They'll have the little musical instrument or their sports bag or whatever. The parents are shipping their kids around the city because they can't get off work to take their kids to practice or football or whatever else. It's a bonkers use case. And it's been, all of a sudden, it's gone completely viral in the city of San Francisco. Have you guys noticed that in your respective cities? No.
I mean, I know that there's a whole business in LA, women-run business that is all about that, right? Family-friendly, to convince the parents to put these on driverless cars. Yeah,
for the children. But you think it kind of defies logic if you don't know what these things are. Like, who would put their child into a driverless car? You think of the danger, but instead it's safer, which is bizarre. Anyway, I just thought that was an interesting use case. And that's one of many. Think of the elderly and the people that have some type of handicap or something. It's just huge market. So you're dead right, Cern. And yeah.
And just in terms then of the PE, market, people like to talk about PE. We have to remember that PE is a shortcut. The PE is an output of a model of discounted cash flows. That is more complicated than most people want to do. So they use a shortcut. They use PE to figure it out. But anybody that looks at rapid growth over a 3 or 5 year time period, depending on your assumptions, you can get massive PEs out of a model that's rapidly growing. The problem that we have is we have never seen the potential for this kind of growth, either before or very often. And we certainly saw with NVIDIA, it grew so quickly, the street was trying to catch up to NVIDIA for a couple of years. And that may well be the case with Tesla as well. But I think here is our opportunity. And again, I would urge people to focus on kind of city by city. And to the extent that we can get data on how many vehicles that Tesla has in Austin, that will be a great data point for figuring out how quickly they're capturing the market. And we should be able to keep track of how much they're charging relative to the competition. I'm really excited about this because I think that we'll be able to get a lot of data without relying on Tesla to supply that to us.
Yeah.
Right now, we're all waiting around quarterly for the quarterly production and delivery report. Okay. Now we need to focus on the growth and the sort of the penetration in each of these cities and how quickly they're doing that. And hopefully we can source that information reliably ourselves.
Exactly. Start counting the autonomous miles. And we do have a case actually where we can look at, and that is Waymo, not as cheap as Lyft or Uber, but it took over the San Francisco market, which I know, Herbert, you've spoken about a lot too.
Right.
So
their market share is at 30%, which is equivalent to Lyft. Lyft fell, Waymo went up, so they're equal. And now Uber still owns 60%. But okay, let me just play devil's advocate, Cern. October, let's say 2,000 Tesla Robotaxis in Austin.
Mm-hmm.
Wouldn't the market just go, oh, well, Waymo has 1,500. So yeah, okay. They're equal to a Waymo test at this point.
Okay, how much is Waymo charging?
$2 or $3 per mile, which is equivalent to Uber.
And how much is Tesla charging?
Let's say, I believe, I personally have been saying it's going to be lower than $2. It's amazing how many Tesla investors kept telling me, no, it's going to be $2. They're going to, because they don't have enough cars and they want to charge higher to reduce the demand because you don't want to have upset customers who don't get cars coming to you. So they'll actually charge $2. I think they're going to go down and say, I'll give it $1.50. I think it's going to be lower than what Uber charges and what Waymo charges.
And so you have a massive exodus then of Uber and Lyft drivers.
True.
Right. And so the market then is left to Waymo.
But they still only have 2,000 cars. So, which is equivalent to.
I don't think it's the right way to think of it. Once it works in a city, the 2,000 can be 4,000 in a couple of days. Yeah. That's the right way to think about it, because we're at the fundamental output of their factories. And this is where this model starts to change. This is a dynamic I think people should understood. One thing, if you can put the chart up that James had with the various costs, the table, we could break this table down even further. But I like the rows that were set out, because for example, if you went into the base vehicle and the self-driving tech, and you realize that there's only one company that is delivering the service, that made their own chip, that designed their own chip, that don't have to pay themselves a 70% margin on that chip. There's only one company in that category. That's Tesla. But then you can keep going down each one of these rows. And what you'll find is that if you were to break out the individual unit economics of each row, maintenance, cleaning, and so forth, you're going to see overhead and margin for all these other companies going to other companies. Everybody needs to make their mark. Everybody needs to make their money in each one of these rows. Tesla will manage all of these rows themselves, and they don't have to pay themselves a they get the cost structure low, so they make a real margin, but they don't have to. They're not going to be at the whims of all these different companies that the Ubers of the world have to contract with to deliver the service. And I just don't think that that's widely understood. If you're non-Tesla, you are competing against somebody that is actually doing all the services and then all the product themselves. They don't sell themselves a vehicle at a markup. They don't sell themselves their self-driving tech at a markup. They don't have to rebuild their self-driving tech into a car. They don't have to buy a maintenance plan from another company who's going to put a markup on it. It's their own, they know their own costs. They don't buy cleaning from someone. Charging, look at charging. They have their own charging. So one thing is the markup and the margin. The other thing is, how long would it take you to do this if you wanted to change your own unit economic model? And some of these things are 10 years in the making. Like Tesla kicked off their chip team in 2016. Tesla kicked off their supercharging network. This is 12, 13 years old. So to need the barrier of entry from a capital perspective and the barrier of entry from an engineering and capability perspective is so high to get to the terminal cost structure the way Tesla's designed. Tesla's system design for delivering this whole thing is at a fundamentally different level when it's at scale than all of these other offerings.
Yep.
And I think that's the part of it that is fundamentally, it would take many years, and they may never get to it. There's what other one company is going to be able to deliver all of those rows?
And that's exactly, Jeff, you said it so succinctly, and that's what I've been challenging myself, because I always like to steel man myself all the time. Name one vector where the competition can beat them. I can't find one. And that, if I was the competition, I would not be able to sleep at night.
Yeah. And yeah. Well,
Chinese
no,
market
I
is
mean,
completely different than the U.S. These Chinese companies, they have the government backing. Number one, they can create national, cleaning services automatically.
Oh, you're talking about the U.S., yeah.
Yeah. They all have. Many of them are actually car companies that can build vehicles, right? So very different than the U.S. market. Yeah.
I mean, none of them have an autonomy solution that's anywhere near the capability or cost structure of Tesla even today. Like they tear down a Tesla and they look at it, they're like, oh wow, how are they doing this? So I don't know. I wouldn't necessarily just give it to you're right, Herbert. They can do a lot of things at a lot lower price point. There's no question about that. But I don't know if they're going to be there from a performance perspective and getting the cost right and getting all of that together. I mean, right now, like Baidu has a product out there, but they're limiting the number of cars based on profitability. Nobody, I don't think there's a service provider that says, I have a Robotaxi network and I'm profitable. Here's my P&L. Look at it. If somebody has it, they should send it, comment on the video and send it over, because there's a reason why that's not happening.
Yeah.
James, the one thing I think that other companies have an advantage over Tesla in is in media narrative.
Mm-hmm. Yeah, good
right.
point.
Yeah.
Now that hurts Tesla, I think, when they're selling a $40,000, $50,000, $60,000 vehicle. I don't think it matters as much in a Robotaxi world, unless the media tries to scare people and say how dangerous Robotaxis are and all that garbage. But Tesla will have the data on their side. They should be able to refute that fairly easily. But again, don't underestimate the impact of an incumbent that is in its last throes of life trying to protect itself.
Yep. Very good point. Very good point. And
Agreed.
actually, another point to tie on to what Jeff said about being so far ahead, there's a very interesting quote here from a Chinese manufacturer. You guys probably know him very well. His name is Lee from Lee Auto, I think. I don't know his first name. But he said words to the effect that in the AI era...
Robin Lee. Mm-hmm.
Robin Lee. He said words to the effect of mastering the fundamentals are essential and cannot be skipped. And he also spoke heavily about Tesla's fundamentals are very solid and they are far, far ahead. For a Chinese firm to kind of wave the white flag like that, I found to be quite profound. But I want to anchor in on that sentence. in the AI era, mastering the fundamentals is essential and cannot be skipped, because I think there's a lot to unpack there. Jeff, Cern, Herbert, like he's talking about the mastering the fundamentals. Like I interpret that as, 7-8 years of looking at data and trying to solve this very hard problem. And there's no shortcut to getting to FSD is the way
you can interpret that in all sorts of ways, but the way I would interpret that would be that, the whole thing about how everybody jumped on LiDAR. They thought LiDAR was the answer, multiple sensors. And then they realized that Tesla showed them the way that you need to have neural nets, you need to have supercomputers, you need miles driven. And then a few of them, 4 Chinese car companies, have started to make that move. And basically he's saying, and they're one, right? That, you can't skip these steps that Tesla's laid out. You got to go to restart all over again. Like that's why I interpret it, because he was talking about FSD. I don't know what else he might be referring to.
What I find to be fascinating is seemingly you've got everybody taking the LiDAR approach, and you've got Tesla doing vision only. If I was the CEO of one of these companies, and all these years ago when Elon was saying in no uncertain terms that LiDAR is a fool's errand, I'm shocked that none of these other companies at least tried to attempt.
Four of them have already switched over, including Huawei, but it's only just a year ago.
Yeah,
they said,
right.
Okay, we're going to do neural nets. We're going to do vision only.
Yeah.
The reason why they've taken so long, right, is when they did LiDAR, they've already invested in LiDAR, and so then you can't just drop it. Like Tesla
it's the
never
sunk cost
invested in
fallacy.
LiDAR.
It trips up companies all the time. Yeah.
Yep. Precisely. Can't pull out now.
Right. We've sunk billions into it. We can't
Tesla
stop now.
started off with vision only. They did that 12 years ago. We're going to stick with vision. But all these other car companies, they thought that you had to do LiDAR. And so they invested in LiDAR, and then they cannot break out of that anymore. So,
because that spreadsheet that James just showed, these companies know the math. They know how much it's going to cost them. If I was a finance guy in one of those companies, I'd be waving my hand and saying, wait a second, can we find a lower cost solution?
Well, I think that's what they're doing now. They're partnering to do just that.
Yeah.
They're trying to offload. It's like, okay, we've got the technology nailed. We just need to scale this up, and we don't want to do it anymore. You want to partner with us? Maybe that's one of the angles too. I see some of that happening right now because they know the guy with the big sickle or scythe is coming. So kind of ominous.
And like Jeff Bezos always said, your margin is my opportunity.
Yep.
Right.
Exactly.
And Tesla being vertically integrated, they can capture the profit potential or the profits. While these other companies, as Jeff said, they have to buy NVIDIA chips. Tesla doesn't have to worry about making 70% margins on its own inference chips. It's just a cost item for them.
Exactly.
Yeah. I don't. I think there are media narratives that just run wild, and if they go unchallenged, they just seep in. Like for example, if you let the Chinese ship into every region in the world, they're going to take over the world in EVs. Well, that's just not the case. And by the way, they're allowed to ship smartphones everywhere in the world. There's a couple of restrictions, obviously, in the U.S. with Huawei ZTE, but in general, they can ship broadly, and they've moved up. They're definitely, they should not be underestimated, but still, it's 1 and 2 are Apple and Samsung in terms of margin share. Think about margin share versus market share, and even in market share, Apple and Samsung are doing fine. But when you start thinking about margin share, I think this is where this conversation changes completely. And this is where I think there's people talking past each other and analysts talking past each other on X, because they assume that the existence of other people doing robotaxis mean that Tesla won't be successful in their own thing. But once you analyze the unit economics and the system design of what Tesla is doing and their implementation, and then if you analyze the other one objectively, you can say, okay, well, they can participate as long as they want to lose money, or they can participate as long as they want to make under 5% margin. But you have to objectively analyze their business plan, and you have to objectively analyze their system design and what they're putting out there. And both, you can't just take the existence of them putting a car on the roadways and say, well, they have it, and therefore that they're going to have some form of market share. This is why it's 2025, and we've heard for 10 years that the competition is coming in EV. Now, did they flood and put EVs into inventory? Sure. But as far as we know, everybody that puts an EV into inventory besides Tesla is losing money as a business unit. And so if you don't compete on the business model and the volume and scale of product and the product offering, and you just do one or the other, you've got to be able to piece that apart. Analysts have to be able to piece that apart and understand the difference between margin share and market share.
All right. Talking about margin share and market share, can we, I think we need to address the potential for, okay, again, some people are saying right now, you've got Tesla's vehicles are in between two growth waves. We're about to hear the launch of affordable vehicles. That's coming right now. The Model Y was refreshed. That looks like it's going well. At the same time, all we're seeing is sales concerns because of Europe. Every single country has a reduction. They're saying what's going on. So is there a TAM expansion? We just addressed that at the beginning of the show because of these new vehicles. But will they come in this year? Or is this year basically a flat year and it's going to be the following year where we're going to see sales growth again of vehicles?
I think as we kick this off at the very beginning, I think we're going to see two catalysts that are going to drive TAM expansion, particularly for the US market, because two markets that matter for Tesla. Yeah, this year is China and USA. USA is going to explode because firms like BMW, Mercedes, all the luxury brands that used to be in the wheelhouse of Tesla, they can no longer sell in this country right now. And then the US brands, they survive on 2 to 3% margin. That's going to go up by 5 to 10%. So they're going to now go from maybe just making a tiny little profit to making minus 7% margin. That's the other big factor too. So as I think, Cern, you said a minute ago, it's like how much money you want to lose, how many of these things you want to make. The market's going to blow wide open pretty fast. And we all know all the actions in Q3 and Q4 too. So we'll see.
Okay, that's James. Wow. First time I heard that, James. So you're saying the tariffs and then the because of that, that's
the lower cost model. Yeah. And as a fun little slide that I love to show too, just to drop the penny, if you could put up slide 6 here, not that one. This is the choice you have: a car that drives itself. And Cern talked about the halo of self-driving cars running around the United States in a very short amount of time. There will be no choice. Are you going to buy something that's going to depreciate and go to zero value in 3 years? Or are you going to buy something that can drive itself and maybe turn into a money spinner for you and your family? There's going to be no alternative. It's a total Tina moment. There is no alternative.
The debate is whether it's going to be this year or next year. You're saying this year.
Yeah.
FSD Q3, demand driver, FSD becoming a demand driver this year. Okay.
I would agree with that. I think it has the potential. I think it accelerates as the year goes on. When it first starts to, impact things, it remains to be seen. But certainly Q4, I would expect that to be a demand driver. Is it enough to sort of save this year and all that? I don't know. But you know what? I don't really care. I'm not worried about 2025 results. That's not what this is about.
Is affordable vehicle sales this year, Cern, going to be significant this year?
I would probably say no, right. But it's positive and it's heading in the right direction. And for me, that matters more than whether or not it makes any real difference to the bottom line, right? It's all about trajectory and how fast it's going there. That's the key thing.
Tesla hit ICE parity in 2023. The calculation I make now is Teslas are now $7,000 cheaper than an equivalent Camry or something else. Okay, anybody in the market for a vehicle, unless you have severe EDS and they're not interested in safety or a car that drives themselves, they'll go buy that Camry. Anybody that spends 5 minutes doing research, they will buy a Tesla because they're cheaper, better, safer, and can spend money in the future. Jeff?
If I go look at this from a supply chain perspective, I don't see people leaning forward this year because of the macro uncertainty. So what does leaning forward mean? Leaning forward means you've got a new product launch of lower cost vehicles that maybe attack different segments, and you would go in and you would go tell your suppliers like, look, I want 1 million sets of material brought in this year. We may only ship $600,000 cars, but I want this whole supply chain primed and I want it moving. I don't know if they're going to lean in like that, given the tariff landscape and the macro uncertainty. So if they don't lean in, if I'm Tesla, this is the supply planning and demand planning art and science behind these things. If you're not leaning in, then you may be okay with, if we put the products out there and they're really successful, we're going to have longer wait times, and then because of the strength of our supply chain, we will go overcome that and we'll catch up. If there's really demand there. I am with you on the fact that analysts are spending so much time about 482 units in Sweden, which, by the way, you can't even get license plates for your Tesla. The post office won't deliver your license plates to you because of the union strike. Like people don't break these individual issues down and understand what's actually happening in some of these countries. But you have so much media attention on that. If they took a fraction of that media attention, they applied it towards what's the actual go forward landscape. I am in the camp of there's going to be severe destruction of auto brands occurring as we look ahead if these tariffs stay on. We haven't even seen the response from the EU yet, and what are they going to do with our cars from the US? But that's not a Tesla problem, actually. And because Tesla's in the EU already. So I'm in the camp that this is not actually being accounted for. The fact that the auto unit is a zero in the minds of analysts, and I actually don't think that they're counting this risk. By the way, if you notice, the other auto companies are doing this cute thing, which is they're going through their financials and then they're saying the tariff impact is this separate number. And I think you're going to see them do this, which is here's our revenue, here's our whole view of the financials, and then here's the tariff impact on the side. So they're not going to actually, even though it's fundamental to everything in their business, every part they bring in, every repair order they do, everything it's going to cost more money, they're going to separate it out and show it as a separate thing of like, this is what the government's doing to us and this is how our business runs. But at some point it's going to catch up. And I just hope we're not in this situation where we have auto companies giving money to the government and then we as taxpayers have to go and bail that out. But that could be a whole separate show.
Okay. Well, we did cover, and there's two other wild cards too. So I mentioned two catalysts for auto sales, but there's two others which aren't on the table yet, but they could be. One is tax deduction for American-made cars, for loan interest for vehicles, which would be huge because Americans borrow to buy cars, and some Americans need a car to get to work every day. Second of all is the proposed tax credit for American-made vehicles that, from my rough calculations, could be worth $3,000 plus on top of existing credits. But these are two things that would also only help one player. So the odds are stacked. We'll see if they happen.
The other thing too that's going to happen in the not so distant future is right now Tesla has to match up production with demand and deliveries and so on, right? But in the not so distant future, Tesla not only has consumers buying their cars, and as we talked about, TAM expansion and increased demand, but Tesla can buy its own vehicles. So now you can run the factory much more optimally. You don't have to worry so much about where consumer demand is.
Gosh, interesting.
Yeah.
Right? And so that also benefits then the cost of the cars you're selling to the consumers, because if you're running the factory at, 80, 85% of capacity, whatever the optimal number is, and that's going to depend on all kinds of things.
Yeah. Kick out 1 million Cybercabs with the extra 15%.
Or just Model Ys. So you're saying like if Tesla goes, okay, next year I want to have 2.5 million sales, fine, I'll buy the 530,000 missing.
Yeah. Right. And again, it's just copy paste to each city. And so, okay, we've got 2,000 vehicles in Austin. Oh, okay, tomorrow we're now at 5,000. And then the next city gets another. I mean, it's just, they can disperse these vehicles wherever they want very quickly, not worry about where consumer demand is anymore, right? They'll sell you a vehicle if you want to buy it, but they don't have to run the factories worrying about that anymore.
Yeah.
that will be an interesting crossover point. I don't know exactly when that happens, but that's something that's coming for Tesla too.
Yeah, that's supply shaping, demand shaping that will change the financials in for the other vehicles they sell in the factory. I think it's a good point. Tesla was a build to order model, and then they layered in a build to inventory for certain vehicle types at certain price tiers. And people don't realize that when they go in the configurator and they look and there's a vehicle in inventory, people think it's like the end of the world. Like, no, you actually have to have inventory to sell to get to a certain level of sales velocity. In the past, when they were doing 50,000 cars a year, they could be pure build to order. But now what they're doing, you actually need some level of inventory. And what Cern is saying is what they can actually do is they could start absorbing that inventory into the Robotaxi network, or that could turn into a shop order to the factory. So now in the factory, you're building the order, you're building to Tesla, you're building the inventory to sell the customers, and then now you're building, to the Robotaxi inventory in that network, and then that's absorbing a lot of fixed costs out of each factory and helping them level load. So, yeah, there's a number of things. I mean, by the time they start building Cybercabs, there's a completely different approach to how they're building the product as well. So there's a number of things that are coming for the company. I think they're really exciting. Again, those other companies that don't build their own product, they're not going to reap those kind of benefits. They also don't have the same amount of risk.
And Cern, you should apologize to Herbert for blowing his mind.
Sorry, Herbert.
I haven't thought of that. I have to sit here and think a little bit more about what you said. I think
It's huge.
there's a lot there. I need to understand that. Okay, so one last question, guys. By the end of this year, Tesla's cars. Okay, let's talk about vehicle delivery numbers and all that. But just tell me, do you think that you're going to be able to talk to your car? You're going to be able to control your car through Grok? It's going to be able to drive you and let you sleep here in Washington State, in Florida. Not Robotaxi, but me who own my Tesla. Tesla will say, "You can sleep, Herbert. It'll drive you to whatever place you want to go." Is that what's going to happen by the end of this year?
The talking part, yes. The unsupervised FSD for people, maybe, but definitely sometime next year.
Yeah. I'm trying to look up my notes, but on the earning call, I could have sworn Elon Musk said unsupervised by year end in the United States will be available. Several cities.
Do you believe him, James? You believe everything he says?
It could slip. If it slips to January or March, who cares next year? But the point is it's coming. And I must say, like, the Cybertruck has opened up my aperture for traveling. I hate traveling. I hate driving. I hate flying. But I did, for the first time ever in my life, 10,000 miles in about 10 weeks. And I normally do 5,000 miles a year. That it's just absolutely changed the game for transportation, me personally. And I've got a little fun meme too as well. Just a little breaking news. Bitcoin yesterday was at 96,000. It hit 104,000 on this call. It's an $8,000 candle. The question is, will the Cybercab take Bitcoin one day? just for giggles. I just thought
Doge, not Bitcoin. Doge.
I thought that was funny, who knows? But yeah, there's so much to think about. And I keep thinking, where are the attack vectors? Where is the competition coming? It's like, I can't see a way, except for the media angle, perhaps, as you mentioned. So,
what's your thinking, Jeff, on that question? Last question.
Oh, at the end of the year, so if we don't have full unsupervised, what you'll have is some variant of that where it's better than what we have today, where you're not getting dinged at as soon as you look down at your phone to check something, or you look down at something. Will be some gradient of where we are today versus that, and I think it's going to be a really good. Remember, we're still driving off of an FSD release based on November of last year on a model that was probably made in October or September, October. So I think we're due for a fairly big update. I think Tesla is going to copy and paste very rapidly. I think that's the whole fundamental system design of their approach to Robotaxi. There are less steps for them to cut and paste than it is for others. And I think they're going to be able to flex up and flex down vehicles much more quickly than others. So Yeah, I think this is going to be an interesting year of transition. I don't, again, if we're going to measure every city, every country, every city that Tesla sells cars into and comp it to last year, that may be the whole media narrative that happens throughout the year. But meanwhile, Tesla's going to have cars that drive themselves. And at some point this year, we didn't talk about Optimus, but I think several thousand Optimus will be in a Tesla factory doing some form of meaningful work. I do think that they're going to build that. Those signals went out to suppliers. Now that could change. Okay. They could change that signal, but I think they're going to build product. They're going to learn stuff by building product. And a lot of those optimists we're not going to see. They're going to go they're going to walk themselves over to a reliability lab, because that's one of the fundamental areas where anybody that's designing humanoids is going to trip up, is that walk to the reliability lab and then being able to walk out of it.
Great show, guys. Fantastic show. This was a killer one. Guys, thank you very much. This was full of information. Everybody came to the table. Thank you, James, as always. You always bring the charts and graphs and tables.
So Cern.
So Cern does the
Jeff brings a big brain.
the big brain. All right, guys. See you soon. Bye.
Thank
Thanks,
you
guys.
all. Good show.
Take care.